All right, ladies and gentlemen, the crypto market has been insanely red today. This is absolutely brutal. In fact, starting yesterday, the market went down. I mean, Ethereum currently is down 10%. It was down at 20% at one point in time. Bitcoin was down double digits in a 24-hour period. Both are down significantly for the week. Today's video, we're going to talk about what's going on because I feel like I've seen a lot of commentary on this, and I don't think anyone has gotten to the root of the issue of exactly what's going on, at least for the videos that I've seen. So I'm going to talk to you about the research I've been doing, what's been going on, and I'm going to share with you what's causing all of this. I'm also going to share with you, first thing we're talking about exactly what's going on and what's causing the markets to go red. And people are like, oh, the equities markets are down. That's why crypto is down. Yes, but why are the equities markets down? Oh, the equities markets are down because the markets are down overseas. Okay, but why are the markets down overseas? Because it's important that you understand as best you can on the granular level what's taking place. A buddy of mine reached out to me and he said, hey, this is the big boys manipulating the market. And it's like, not exactly. It's bigger than the big boys. And it's important that we understand that as investors. Yes, the big boys are taking advantage of this market in a way that we can't. They're profiting on this in a way that the average investor can't. I mean, the average millionaire investor cannot do the same thing that some of the quote unquote big boys are doing. And I'll talk about that in this video as well. So I'm going to explain what's going on. I'm going to talk about what I think we can expect over the coming days, the next couple of weeks, and potentially the next couple of months. I'm going to sort of tell you what we need to be watching for, what we need to be thinking about. And I'm also, towards the end of the video, going to share with you my plans when it comes to crypto and my personal crypto investing. And I'm going to be very upfront with you, very transparent with you, and very honest in this video. If you can appreciate that kind of commentary, do me a favor and smash that like button. Also, click that bell notification icon. Be sure to click the subscribe button as well. I want to say this. Nothing in this video should be financial advice. I'm not a financial advisor. I'm a cryptocurrency enthusiast. I'm a cryptocurrency investor. I love to talk about this stuff, but again, you need to speak to a competent financial advisor because I'm not your financial advisor. All right, let's get into this. So first things first, what in the heck is going on here? I got to share with you a story. Those of you that have been watching my channel for a while, you know that I currently have a whole series that I'm putting on my channel about selling options, selling put options on cryptocurrency to be able to earn income. The reason I sell put options is because it's something that I have a lot of control over mechanically, and it's also something that can be quite lucrative over time. And so I've been running a series, and it's been very rocky the past 30 days. Well, we're on 36 days now. Well, just yesterday, I was watching the market, and I was watching my options, and the market was down. Ethereum, which is what I'm selling options on, was down 3 or 4%, 5%, and then suddenly I happened to start watching a movie with my wife, and it's like 30 minutes later, I get a message from a buddy of mine who's all into the financial markets, and he's a professional financial guy, literally. And he says, hey, are you watching what's happening with the markets right now? And I'm thinking, no, it's Sunday. I'm watching a movie with my wife. I happened to open up my options trading platform and saw Ethereum is down 20%. Needless to say, that causes a significant amount of issues when you're selling options. So I did a entire video and I talked about how I managed that. But I ended up, that sent me on to this whole research, like what in the world is going on? Like when you see the market move down, when you see something like Bitcoin or Ethereum go down, 10, 15, 20% even, that's a significant move. That's almost a black swan event. Like what's happening for that to happen inside of a single hour? And my first hunch was it's some sort of liquidation event. But what caused a liquidation event? And we're going to be talking about that in today's video. So first of all, it's important to understand that the stock market is down significantly. The U.S. markets are down. So of course, some people are like, well, I'm watching gold. Gold's not down that much, but crypto is. The idea that crypto is real digital gold for most people, for me, yes. I consider crypto like some version of digital gold for me personally, but I understand that knowing that it's a volatile asset. When you hear me say I view crypto as digital gold, I mean over a multi-month, multi-year period, not day to day, week to week. This stuff is insanely volatile. So with that being said, people are like, oh, I figured crypto would hold up. I saw these narratives, there was these headlines. when the last time the FOMC met and people were saying, oh, gold's doing well, crypto's doing well, that's a sign that people are seeing crypto similar to digital gold. That narrative has not played out on a big scale yet. Most people do not see crypto as a form of digital gold. So when you see stuff like this happening, 1,000-point drop in the Dow is monumental. The S&P had its worst day since 2022. That's a multi-year day loss, meaning that holds a record over a multi-year time period. That's a big deal. And so people are oftentimes going to sell assets to cover assets, meaning I'm going to sell crypto to potentially buy more of my dividend stocks. Not me personally, that's what a lot of people do. Or if they're leveraged, a lot of times they're getting what's called a margin call. And so they've got to come up with cash to make that position good so it doesn't get liquidated. So what they'll end up doing, of course, is they'll sell another asset. They'll sell a more speculative asset or an asset they've made money on. If they've been holding Bitcoin or Ethereum for a while, they've probably made money on it. So they're going to sell that. They're going to sell their altcoin positions potentially to be able to bail out their potential margin calls. Now, with that being said, this becomes a bigger deal when we start talking about crypto going more mainstream finance. Everybody is rushing. Everybody wants the institutions to get into crypto. Now, you all know I was not a fan of the Ethereum ETF, the Bitcoin ETF. It's a double-edged sword. Yes, I like how it can cause the value of my crypto to go up, but long term, that's not the real purpose in crypto. And if that's the only purpose in crypto, crypto eventually would fail. That's just short-term or medium-term hype, essentially. And because of the ETFs being in play, because of big institutions, now we're seeing crypto get treated more like the speculative asset that it currently is at this moment for most people. And that means it's a high risk investment. So in a situation where we need to de-risk, we cut the riskiest investments first. Hence, something like cryptocurrency. So this is the downside to crypto ETFs and crypto going more mainstream when it comes to institutions. So we know the stock market went down, but what caused the stock market to go down, right? Which, by the way, all you got to do is look at these headlines here. This is pretty shocking. Stock tumbles around the world. It's not just the U.S. markets. Dow down 1,033. Nikkei's biggest rout since Black Monday. Biggest single day lost since Black Monday. Magnificent Seven, which is the banking stocks, shed $1 trillion in value. Recession odds climb. Ladies and gentlemen, we're already in a recession. I don't care what they say. Emergency rate cut. That's not going to help. I'll talk about that in a minute in the video. Trading platforms crashed. This blows my mind. This is why decentralization is so important. How is it that multi-billion-dollar companies can put up software and that software can't function when the customers want to sell? Why are these platforms crashing? Oftentimes we find out that the hedge funds are getting out while the smaller individual investors are caught holding the bag. We've seen that happen over and over again. It's the same kind of shenanigans that happened way back with the GameStop debacle and all that nonsense, the AMC and all that. Okay, neither here nor there. I don't want to get too far sidetracked on that. This headline right here is important because we started seeing the crash first in the Japanese stock market called the Nikkei, or I think that's how you say it, Nikkei. Asian stock market, Japan's Nikkei logs worst day since 1987 Black Monday crash. So the Dow had its worst day in roughly a 2-year period. The Nikkei had its worst day since 1987. Ladies and gentlemen, something's going on here we got to be paying attention to. So what caused this crash? Now, I knew this was starting on Friday. The same financial guy who reached out to me, my contact said, hey, just so you know, there's a big sell-off in the market today over in Japan. I'm like, okay. And I was somewhat familiar with what was going on with the yen, but I had heard that, in some news story a while back. So I knew, okay, I wasn't totally shocked. Okay, it was a big sell-off. Probably going to be a bit of a sell-off on Monday. Then this morning, he's like, hey, the Nikkei is crashing hard. And I was like, okay, meaning that was over the weekend. It was still crashing. Oftentimes markets cool off over the weekend, but it was still crashing hard. And then, of course, that's what led to the Dow crashing. So what caused the Nikkei stock market to drop? This has been in the works for a while, just so you know. Be warned, this country has the power to single-handedly trigger global volatility. And they're talking about the Japanese yen. So here's what's going on. There's something called the yen reserve carry trade. And this is a theory that talks about the value of the Japanese yen versus like the US dollar. So in a nutshell, here's what's been happening. Interest rates have been right at zero or very close to zero, extremely low on the Japanese yen, meaning it was free or very cheap to borrow money. So when you can borrow money very cheaply, it's like free money. So you take that money and you take it and you go invest it in something else that can go up in value. Now, you can invest in anything. And obviously investors and institutions have been doing that for a while. So just to keep this simple, imagine if you could borrow, hypothetically, 1,000 yen, and you could use that 1,000 yen and you could invest it into, say $1,000 or, some US real estate or buy US stock or buy cryptocurrency, whatever. It's borrowed money. You got to pay that yen back. And this is all well and good unless the value of the yen starts to go up. So in crypto terms, imagine that you owned a Bitcoin, or you could borrow, this is a better example, you could borrow a Bitcoin and you could use that Bitcoin to invest. And you borrow a Bitcoin and you got to take that Bitcoin and maybe you cash it in for US dollars or use that Bitcoin to buy some other altcoin or whatever. But then imagine that that Bitcoin value is going up in dollars. So hypothetically, Bitcoin's at, $60,000 when you borrow it, but it keeps going up. All of a sudden, it's at 65,000, it's 70,000, meaning you've got to pay back that one Bitcoin with not 50,000. Now you got to pay it back with 60,000 or 65 or 70,000 as it is going up. At some point, you realize the investment that you're making with your borrowed money is not going up at the same rate. So what you do is you sell. So if I hypothetically bought Amazon stock with my borrowed Bitcoin, and all of a sudden that stock's not going up, but the price of Bitcoin is going up, and I realize, man, I'm upside down on this trade. What I can do is I can sell my Amazon stock, buy my Bitcoin back. When I sell my Amazon stock, of course, it has the ability to cause the price to push down, go down. Now, when you do this with millions and millions of dollars, that's essentially what's been happening. And I'm trying to keep this very simple so you can understand it. The yen has been getting stronger compared to the US dollar. And this has caused a lot of people to end up in margin calls because they're using leverage. And so they have to cover their margin so they don't get liquidated. So if you come over here and take a look right here, this is the, let's go look at a 6-month chart. That's not working. Here we go. This is a 6-month chart. This shows the yen going up. This means, I know it can be a little bit confusing. Let me just come to the dollars. This is probably easier. So this is saying, right there where my cursor is, it says 157. That means 157 yen to every dollar. For every dollar, right here I could make a trade and get 157 yen. But as you see, it continues to go up. Right here, every dollar gets you 162 yen. It takes more yen to purchase $1. Just like when Bitcoin's going up, it takes more dollars to purchase one Bitcoin. Even though it looks like the yen is going up, the truth is the yen is losing value compared to the dollar. And then watch this. It falls off a cliff right here. All of a sudden, the Japanese yen is 144 per dollar. So it's no longer 261 to purchase $1. You need less yen. That means the yen is getting stronger compared to the dollar. So all of a sudden, if I had $1 and I needed to pay back my 161 yen, all of a sudden I need more than $1 to pay back my 161 yen. And I'm trying to explain this in a way so it's as simple as possible, because I want people to be able to understand what's going on, even if you're not financially astute to all the markets and all the lingo. So because of the yen is getting stronger, this is what's called, essentially right now, has created a bit of a credit crisis. It's because people were using borrowed money, they're getting margin called, and they've got to cover those losses. That's caused the Nikkei market to go down significantly. Now, where do we go from here? Typically, when you have these sort of flash crashes like this, where the market can drop significantly, you will end up getting a bit of a bounce. Notice, even though you don't see a bounce in the valuation here, you don't see a really big bounce here in the valuation, stock prices and stuff have started to bounce back a little bit. Crypto's started to bounce back a little bit. And I talked about that in my last video when I was selling options. Now, I don't know that the bounce will take us all the way back to previous levels. You can see right here we've had a bit of a bounce in the past hour. In the past 24 hours, we're down 10%, not 20% like we were. Bitcoin was down 18% at one point. Now it's only down 7%. So we're starting to come back. And that's typical when there's a bit of a credit crunch that we're seeing. There's liquidations happening in the market. It's typical to see a bit of a bounce. So a lot of people are going to get faked out right here. And they're going to think, okay, everything's okay. The market should start moving up. And I hope that's what happens. However, typically these sort of liquidations don't happen inside of a bubble, so to speak. In the current world market, it's very possible we could see some sort of cascading event taking place over the next day or two. So I've explained what's going on. Now I want to talk about what we need to be looking out for the next couple of days and possibly the next couple of weeks. So first of all, we need to see between now and Friday if we're going to have another dip. Is there going to be another drop? The further we get into next week, the safer we'll be from that secondary market drop. Because the problem with having a secondary market drop is it could be worse than the first one if it happens. There's no guarantee that it's going to happen. I am encouraged to see that the market's starting to pull back up right now. But we just need to be aware over the next 2 to 3 days, we could see another domino fall, so to speak. And then it's going to get pretty dicey. I do think it's most likely we're going to stabilize. I don't think we're going to see financial Armageddon. And I'm always talking like that's in the back of my mind because the world economic systems are weaker than ever. And I do believe at some point we're going to have a very difficult recession that could be felt worldwide. I do think that's possible in the short to medium term. However, you can't worry about that. I always tell my wife, you can't worry about the game you're playing. You just have to. We don't get to control the game. We understand the rules of the game, and then we position ourselves as best we can. So I'll get into my plans going forward. However, what I'm sort of feeling like is likely to happen over the coming weeks to possibly months is that if the yen keeps, let's go on a kind of a 5-day. Oh, there see a little bit of a move up there. So this is the 5-day chart. The yen is trending stronger. It has created a bit of a liquidation event. Once the market gets cleaned out, we'll be more to some more healthy price action. But it doesn't mean that the market's going to go up per se. What we need to watch out is if the yen continues to get stronger. If the yen continues to strengthen compared to the US dollar, then we need to be expecting a downturn. And it could be sizable. And the reason I say that is because understand that there's a lot of exports that leave the Japanese market and that go into the US market. Those things that get exported are going to be more expensive. And it's going to make the yen much stronger. So we have to see what this could do on markets around the world, not just the US market. We're talking about the European market, the greater Asian markets as well. So my concern is the yen is going to continue to get stronger versus the US dollar. And part of the reason I have that concern is because what the US government, the Federal Reserve, what they like to do is when the markets are weak, they want to cut interest rates. Well, cutting interest rates has a long-term effect of potentially weakening the US dollar long-term. And if they continue to cut rates, it basically creates the very same environment that when you cut rates, it makes it cheap to borrow money. So people start borrowing more money, they spend more money, and that creates a short to medium term boost to the economy. That's why they cut interest rates. It's also why in the 80s and early 90s, interest rates were way high compared to what they are now. If they had interest rates that high now, it would destroy the entire market around the world. The U.S. government, they're having a hard time raising interest rates, and they have to ultimately raise interest rates because they can't drop them forever. We can't go into negative interest rates. The challenge is the U.S. government is going to probably attempt to cut interest rates to be able to, quote unquote, continue to stimulate the economy. But by doing that, it's going to continue to make the yen stronger. And if it sounds like there's not a good way out, it's market cycle booms and bust. And that's what sort of has to happen. It doesn't feel good, to have to go through a bust, but it's probably going to happen. So here's my plan, knowing that. Now, I say all of this, and I reserve the right to be wrong. I always try to plan, if things are difficult, how do I manage it? But I always, I tell my kids this, I tell my wife this. You always have to understand that try to be right even if you're wrong, and always understand that your best guess, your best logical understanding could still prove to be wrong in the short to medium term. The world has an uncanny way of not ending. Just remember that. So here's my plan. My main plan is to continue to hodl what I'm hodling. I am looking to probably add to my hodl stack. When the market drops like this, it's almost guaranteed to bounce. Now, it does not mean, let me go to CoinMarketCap real quick. I don't know what that is. Total typo. Let's come over here. We're looking at Bitcoin now. So we've had this big drop. There's no guarantee the market is going to go all the way back up. We'll just have to watch and wait and see what happens. But the bounce is to be expected. Now, is it possible that the market could go here and could even go lower over the next coming days, weeks? Yes, that's absolutely possible. But it could also gain support and start moving back up. That's honest. Everybody's going to give you these TAs and tell you what's going to happen, what's not going to happen. The truth is, it could continue to go up depending on what the macro market does overall. However, I always operate under the I think it's possible. There's a very real threat that could cause the market to go even lower. Even lower. Keep in mind, Bitcoin goes down significantly, 80% every 4 years. People are like, where's the bear market? Where's the bull market? Where's the bull market? Listen, we still have time for a bull market. Absolutely, we still have time for a bull market. We may see a massive bounce coming out of here. But I think there's also a risk of moving lower depending on what happens with the greater overall markets. Over the next coming month or two, if the yen continues to strengthen, and we could see other cascading events that could cause the market overall, including cryptocurrency, to get weakened. So here's my thing. I'm bringing some dry powder outside, and I'm bringing it into crypto, into my HODL wallet. This is when I'm looking to make the big plays. For me, anytime you're nervous, like you're like, oh no, I'm getting wrecked, and it hits you emotionally, you probably have too much money, too much of your portfolio in crypto. When you can see it dip and you're like, yeah, that's crypto. I hate to see it, but that's crypto. Then you kind of know you're okay. And if you see the dip and you're like, wow, okay, time to buy a little bit more Bitcoin, and you're not second guessing yourself like Bitcoin's gonna, dip forever. Could Bitcoin go lower than 54,000? Yes. Could Bitcoin go lower than 40,000? Yes. Could we see 20,000 Bitcoin? Of course we could. 80% down off the highs. 80% down. A lot of people like to say this cycle is going to be different, but just so you know, they said that the last cycle as well. So I don't worry so much about, I understand what I think the cycle is going to do. The only thing I'm for certain about is over a long enough time period, Bitcoin goes up. That's my personal conviction. Over a long enough time period, Bitcoin goes up. Over a long enough time period, Ethereum goes up. Between now and then, 80% can go either way, one way or another. If you watch me earning passive income, I got one strategy that's been making money even during this dip. And if you want to know more about that, let me know down in the comments. I'll do a separate video on that particular strategy. And I don't even have a lot invested there, but it was interesting to watch how it responded yesterday, and it's doing really, really well. It's in profit. It didn't even lose in all that big dip. It didn't lose money at all yesterday in US dollar values. So I can cover that in another video if you want me to. But I take a look at all of my strategies. How did they handle? What happened? Is there something I want to adjust? Do I want to reallocate stuff? Do I have too much risk on? So for example, those of you that are following my strategy on selling options, I did reevaluate my rule set. And I've made one minor tweak, but it's a tiny, tiny tweak, but it helps me stay a little bit more conservative. I looked at my Bitcoin, I looked at my Ethereum, and I immediately thought I need to add some more. So I will add that to my HODL wallets. I'll add a little bit more. My DeFi strategies, my passive income plays, I took a look at those. You know, the casinos, I wish we could see another good casino dividend investment. Those of you who have been following my channel for a long time, Chips, StarBets, BetFury, none of those are worth investing in today per se, but they have done well. They have done so well. It's in spite of all of this, and I'm earning profit. I'm not making a massive profit, probably about $5,000, $8,000, somewhere in there a year right now, and it's trending downward over time, and it will continue to trend down. But man, those have been incredible investments. But I look at things that I can adjust. I can't add more to those investments. It's just been great to watch them. I can't add more to those investments, but I started evaluating my strategies. And I have to be very honest and objective with myself. If there's anything that makes me nervous, like, oh crap, that's a sign I've got too much money there. So you just got to keep that in mind. Now, with that being said, listen, dividend investors, this is the time to pick up your dividend stocks. Hopefully, if you're a dividend investor, you're buying dividend stocks today because some of them were good and juicy. Historically high yields because the stock prices went down. You're in real estate, pay attention. We may continue to see a real estate market continue to soften up. I've been thinking that we're going to see a market pullback anytime. Has that stopped me from investing in real estate? No. I just keep a little bit back because I think we could see a pullback. Now, ladies and gentlemen, I want you to know that the powers that be, the elites out there, they knew what was happening. We saw Warren Buffett, who never sells stock, cut his Apple position, I think it was on Thursday. Jamie Dimon of JP Morgan sold millions of dollars. These guys liquidated money. They saw the writing on the wall. They knew something we didn't know. They got a backdoor phone call. That kind of stuff happens. Hey, just so you know, we're seeing this over here. They were prepared. Why? Because they're going to be buying now. They're going to be buying. So one of the things that one of the reasons I'm always trying to earn passive income is because I want to always have free capital available. So that's why I made an adjustment to my strategy going forward when I'm selling options, because I want to have a little bit more free capital available to take advantage of opportunities like this. Because one of the best trades you could make today was buying Ethereum when it dipped so low, or buying some of the other altcoins because they're bouncing back nicely. That was a good trade to make. Hey, I said this in another video earlier today. I'll say it here as well. Keep in mind, historically on the U.S. stock market, the single worst trading day of the year that has the biggest loss is usually followed within 10 days by the best trading day of the year. Keep that in mind. So if you're not leveraged, it's usually better just to hold on if you like your assets. If you're not speculating and you're investing, you're buying assets you want to hold long term, don't get spooked out of the market. Just hold on. If you're trying to build a position, you want more Bitcoin, you want more Ethereum, then plan to buy on the really bad days. It may go lower, but it also is likely to bounce at some point. So you just got to be aware of that. It's a great time to reevaluate what you're doing. That's always the case. If you have any questions, let me know. I've wanted to just be honest with you, just kind of have an open dialogue with you, an open conversation with you. Thank you so much for watching. Thank you so much for listening. If you have any questions or comments, let me know. Ladies and gentlemen, this is crypto. It is, sometimes I feel like it's crypto against the rest of the finance. Not like there's anything wrong with finance. Crypto is one of my smallest holdings, but I love it. It's my favorite part of my portfolio. I love what it represents. It's giving individuals control over their own economic freedom, meaning they have their own decision to be able to do something like decentralized finance. And you don't require permission from the big boy, so to speak, to be able to take control of your financial situation, to control your financial instruments, to take control of your investments. That's what DeFi allows. That's what crypto allows. I believe this technology is going to change the world. And I'm so thankful that we're all here now. And if you agree with me, do me a favor and smash that like button. And if you're still here, type down in the comments and say, I'm still here. This is Crypto Wealth. I'm out.